Hey everybody, this is Julian from J. Lewis Trading. It is the 31st of March, last trading session of the week. It's Friday, and this is the video version of the audit that we'll be sending out shortly after it is done. As I usually do, I want to start off at the top of the market, S&P, or in this case, the SPY. Just wanted to go over what the market was doing this week and how we were reacting to it with our long positions. You can see that generally speaking, the SPY and the overall markets are still moving in an uptrend. This pullback last week into Monday had a bunch of people scared. A lot of people were curious if that 50-day was going to hold or if price action was going to bounce off of it. You can see that price action did open up below the 50-day on Monday, but did close above it and then confirmed a close on Tuesday and then remained bullish for the rest of the week. You can see that this right here is Monday, Tuesday, Wednesday, Thursday, and today being Friday. And you can see that price action did cross through that 50-day moving average on the 1-hour chart and has stayed above it for the balance of the week. So if you were going long, getting into some long positions, you would have fared okay. And you can see the price action slipped a bit today. So we'll see what happens Monday morning if this holds or if it comes off a little bit. We'll see. As for us, we didn't do too much trading. We've really been focused on just taking trades that are quality and not looking to hold on to things too long. It's kind of a weird environment, as you can see right through here, that price action was just sort of caught in this little range up through here, and then it came off, and now it's bouncing back. The market's kind of a tricky place to try and figure out which side of the trade you want to be on. Momentum stocks are getting kind of choppy. So what I decided to do and what we decided to do was strategy-wise, maybe cut down swing trades and just focus on taking nice little trades intraday. Nothing too crazy. And so this week, we were just looking for those quality trades, and we only took 2 trades this week. There were a couple on the watch list that worked out, but just decided that in terms of entries and where we wanted to trade them, they just simply weren't good enough. So we passed on a couple that were on the watch list. They did move, yes, but we just couldn't get in where we wanted to, so we passed on them. The first stock that I'll start with is RGSL. This was a trade that we took. Oops, I got the wrong symbol here. RGLS, pardon me. So you can see right through here, this had our setup that we look for. This is that gap fill strategy that we talk about. We saw this right through here. We had that trend line support at resistance, pardon me. We had trend line resistance over here at 151. And we had some support coming through here, building up that ascending triangle. And then right through here, it popped. We got in on the 24th. Where are we here? We got in this day right here after a pop and pullback. We bought into that pullback, and you can see that we went long only for a couple days, and then we got out on Wednesday right at the open. And on that trade, we netted a 15% return on this. This was our biggest mover for the week. After this, we only took one more trade, BCEI, which I'll go into in a moment, and that wasn't huge at all. I got sort of scared on that trade. But back to RGLS, we took this one. We netted 15%, and I'm just gonna get down here on a smaller chart for you. What we did by the way of entry was back on, we took this actually last Friday, and we got in on Friday, opened up Monday, and this was sort of the window that we traded. So you can see that we were buying in here on Friday, and we were jumping out of here rather, in this area. I thought right up through here at 190. When it closed at 175 and it went up through 190, after hours. I honestly thought that that thing was going to just skyrocket from there. With these trades, I mean, our primary close target to close this position out, um, pardon me, is up through here at 214, and at 190. I really thought after hours that that thing, if it would have taken out $2, that round number, I really thought that this thing was going to pop. It sort of stuck around at 190, came off pre-market the next day to 185, and then just started to slide. I didn't see too much value in holding it, so I sold the position, and you can see that it didn't really do too much after that. It kind of slid off, and now it's trading in this 135, sort of 165 range. So it's kind of stuck on the upper portion of a 30-cent band. Not really anything useful there going on for us. I mean, we'll probably revisit this thing around 190 because I do feel that when 190 is taken out and $2 is triggered to the upside, we'll probably get that 214 fill, no problem. So for now, we'll wait. But what we did do is we managed to grab a 15% return on our position. Nothing too crazy. Second trade, as I mentioned, was BCEI. Pardon me. And we did the same thing through here. There was no gap, as you can see, but what we were looking for is that we had this nice little consolidation period down through here. And you can see that there was some obvious support. And I really like this 3-candle area right through here. So I thought to myself that that would have been a decent area to trade our system. And right through here, we popped out. I got sort of aggressive, and I was in prior to the breakout. Let's see, what day are we here? This is the 29th, which is here. So this was my entry, this kind of window right here. You can see the price action popped up through here, and this was kind of the area that we were looking at 117 to break out. That's what I was hoping for. I bought in over here. This was a very, very small trade, but I bought in right down through here at I was in at 109, and I was actually out of this thing at 116, as you can see right up there. And the reason for that was very simple. To me, I had a problem with the fact that it set this high, pulled back where I got in. I like that, but then it rallied back up to that 117 level, and then went sideways. And as it was going sideways, we had this divergence thing going on through here, and that really bothered me. And there was no real volume. There was no sort of suggestion that there was interest in picking up this stock. And so I got a little freaked out, and I got out of the position. I netted a 6% return on that. Nothing too crazy, better than losing, but there was nothing really too positive going on here. And then as it sort of made its way back up to the 117 level where it broke, truth of the matter is that I was nowhere near my computer, and I didn't take this trade. Had I been a little bit more focused, I most definitely would have taken that. You can see in terms of our strategy and the pattern, there is that ascending triangle right there, and it had a triple top almost that was taken out, sort of approximately, but you had that the set, the retest right through here, the pullback, and then you can see that you had this nice volume bar down here, and the MACD was nice and low, and then it just started to go up, and that would have been a decent trade. It moved up, pulled back, and then set another high up through here before sort of taking off and sort of checking out for lunch, if you will. So all in all, this week, it wasn't an explosive week. There wasn't anything off the top crazy that we were trading. I'm still watching BCEI because I do think that when that 124 level is taken out properly and confirmed on, we could get a decent run up to 160, 176 area. So I'd be looking at sort of this level right through here, 176 level right through here, and we'll keep monitoring these. You can see today it's down almost 8%. It got sort of ripped. And this is why I really prefer doing the day trades. And one thing I like doing is if I'm going to swing trade, I really like to see something that's moved over a couple days, buy it on a pullback into the close, and sort of the bet would be that there's a speculative spike the following morning, and sell into some of that strength. So as of right now, and now that I'm looking at it, I don't know if you can see this, but you've got sort of a shoulder, head, and almost another shoulder right through here. If this thing decides to break down at 115 from 127 to 115, I mean, you've got sort of a 10-cent move down that this thing could commit. So I don't know. We're just watching, but the bottom line is that there wasn't a lot being traded this week. We still have a bunch of stuff on the watch list that we are watching. Just to go over some of the trades that we didn't take. This was one of them in NVCN. I mean, this thing was up 7% today. Nothing too crazy. Not really enough for me to get excited. And yesterday we were looking at, I think it was ITEK. ITEK. This is another one. ITEK. And this is a trade that we passed on yesterday just because it wasn't fully ready and it kind of got testy. But what we were looking at this this 223 zone right here, and we were looking at that area to get broken out. 223 is just up through here. Well, that's actually 220, pardon me. But we were looking at that area for a breakout, and you can see that nothing doing. It just couldn't get up to that level. So we passed. Even though yesterday was a good day right out of the open, that wasn't my entry. This would have been a decent entry right through here had you been watching at 195, trading it up to 220. I mean, what do you got? 25-cent gain on a $1.95 stock. I mean, you're going to do okay, but we did not take the trade. So, having said that, that was one of the trades that we passed on just because it wasn't where we needed it to be. I'll be monitoring that 220 level. 223, 220, that sort of zone resistance level is going to be on my watch list. And unless that area is taken out, I've got no absolute interest in trading this. So that was that trade. Again, not a lot going on. Excuse me. Seems to be a little bit of uncertainty out there, but we did manage to grab 15% off of RGLS. I managed to get a 6% rip on BCEI. And, net up at the end of the week, I'm up 21% off 2 trades. So 10.5% return on average, not too bad, not the greatest. I've done better, but that's where we're at today. And you saw that the SPY upticked all week after sort of a brutal week last week, and that's where we're at today. So this was the audit. I did want to make it nice and quick, nothing too crazy, but this is where we're at in the market, and we are position free as of right now. We'll be back at it on Monday. And if you have any questions about this audit, feel free to give us a shout. info@jlewistrading.com.